All right, everyone. Welcome back. Hope you had a great lunch. We're able to make some connections, talk to some friends and colleagues. So our next panel, the future of AI and of AI governance. As AI systems become more powerful, the stakes for governance get higher. Explainability, model risk, consumer protection, these aren't academic anymore, but they're live questions regulators and companies need to address. And we used to worry about rogue traders. Now we worry about rogue algorithms with better math skills. And I'm going to now turn to our esteemed panel to introduce themselves, starting with Mike, and then we'll go down the line.
Hi, thanks so much. Mike Su, former acting Comptroller of the currency.
Hi all, I'm Vaik. I'm the CEO and co-founder of Dynamo.
Hi everyone, I'm Amanda Estiverne-Colas. I head our payments practice with Perficient, and this is my first time at DC Fintech Week, so super excited to be here.
Melissa Koide with FinRegLab. Just for context, we're a DC-based research organization focused on technology and data in the financial services system.
My name is Him Das. I am a senior managing director and counsel for K2 Integrity, which is a New York and DC-based AML, CFT consulting firm and investigations firm.
All right, thanks everyone. All right, so let's dive in. We've talked about the convergence of AI and finance, but the big question is, how do we govern it? I don't know if there are answers, but we'll find out. But let's start by zooming out. And Amanda, from your perspective, what's the single most urgent governance issue that financial institutions face with AI?
Yeah, ooh, what a question. In conversations that we have with financial institutions, there's always an assessment on how to leverage AI and deploy the tool in the best way, right? Considering governance issues and things like that. I think the single most, urgent governance issue that I would say is really is risk and bias of the data, right? Bias of the data, discrimination of the data, especially around automated decisioning, right? We think about certain applications such as credit decisioning, right? Credit scoring, or anything around loan approvals, like mortgages or small businesses, and even insurance products, right? Looking at underwriting with insurance. This is a high risk, having any discrimination of the data, because bad data in, right, will have an outcome of bad data, right? And so it's very important that institutions are very transparent in some of the data that's being collected. And that I think is top of mind when it comes to AI governance. And of course, there's a lot of solutions around this. Like, we're not going against AI. Solutions like data lineage that we'll talk about, but really bias and is really the most urgent issue.
Yeah, I think that's a great framing of the stakes. And, of course, the view from the regulatory side can look quite different too. Mike, as former acting comptroller of the currency, you've overseen bank risk, model risk, regulatory compliance. How do you see the traditional banking model risk management evolving to accommodate, black box models, generative AI, or AI systems that are constantly fine-tuning after deployment?
So I think the risk of category error is actually quite high. And what do I mean by that? Is ChatGPT a model? Is it software? Or is it a third-party service? It's actually all three of those things. But each of those is risk managed and governed differently within a bank and as it's supervised, right? Model risk management, MRM, 11-7, a lot of folks in this room are familiar with it. That has a very particular set of requirements and expectations around it, and it's a certain group of people within a bank. That's different than software development, right? The SDLC lifecycle is different than third-party risk management. Where you put it matters. And the thing I fear is that a lot of the tendency is for risk managers, supervisors to kind of shoehorn the AI square peg into a round hole, and it doesn't quite fit. And especially the evolution is really, really fast. And I think what we really need to do is just the thing you can rely on are first principles. And what are the first principles of risk management? Is the thing doing what I want it to do? Can I prevent the thing from doing the thing I don't want it to do? Can I assess its vulnerabilities? And if something goes wrong, can I fix it? Like those four are just going to stand no matter what. And what's interesting is outside of banking, in the broader kind of AI space, the tools for doing that are, is it doing what I want it to do? Evals. Can I prevent it from doing what I don't want it to do? Guardrails. Can I assess the vulnerabilities? Red teaming. Can I get it to fix something? Actionability. Like these concepts are pretty common sense, but translating it into something that regulators and banks can put into action and deal with and evolve, that's the really hard part, and I think it's going to take quite a bit of work.
So, Mike, if I could just follow up on that. So what can regulators do then to adapt to it? I mean, you have sort of the guardrails and the things from the creators on the one hand, but what do regulators do to adapt to it?
So the first thing, you just got to roll up your sleeves and get in there. I mean, I think there's nothing that can substitute for just using the tools yourself. You can read about it, you can watch demos and things like that, but you just got to get in there. And not only, but that really does help to, I think, inform how you understand and interact with it. And then you just got to be very open-minded and meet with a lot of folks who know what they're talking about and just learn. I think it's really just kind of a very steep learning curve, but that's okay. I think that's where we are now.
Thanks. Melissa, so you sit right at the intersection of research and policy where sort of evidence meets regulation. One of FinRegLab's hallmarks is bridging empirical research with policy implementation. Where do you see the biggest gaps between what technologists are building and what regulators need to ensure fairness and transparency?
Sure, and I always love going after Mike, haha. No, Mike's got really, really great perspective on all of this and has been putting out a number of really fantastic papers digging into these topics. So if you haven't read them yet, check them out. I'm happy that I think what I have to say is quite complementary to what Mike is saying. And I think it's also an important sort of sobering, like, let's take a breath for a minute because AI is moving so quickly. It was just a year ago that there was level of regulatory anxiety around using supervised machine learning techniques in some of our, frankly, most promising, but also some of our most high-risk use cases, and that's credit underwriting. And now, fast forward a year later, we are in a world of, I think, a lot of ambition, clearly a lot of money around non-deterministic AI tools and their possibilities in financial services. I will say at FinRegLab, we're really excited about what things like Gen AI and language models can do, even in contexts like credit underwriting, like finding, data insights from language data from a transaction account. But it's just worth acknowledging that banks are directly regulated entities. Fintechs, have been directly regulated entities, or at least supervised, larger institutions. And this uncertainty around something that is more black box, whether it's a supervised model or something like a non-deterministic model, like a language model, creates a lot of anxiety about how do you use them safely. And Mike is spot on, like we are learning rapid speed. What are the techniques to really interrogate and evaluate? I don't know that it's explainability. I don't think we've solved explainability in Gen AI land, but I think we are after in technically seeing academics come up with solutions around trustworthiness and confidence and model stability, and that's exciting. But let's also not lose sight of the fact that, even in supervised machine learning land, some of the regulators of the past, who probably will be back at some point, had a lot of concerns about how black box supervised machine learning models were working. I will also say we have done research, and we put it out over the summer, where we were interrogating and horse racing a much more traditional approach, a logit regression against a XGBoost model, both with and without alternative financial data. And the results were significant. I mean, you have a lot more capability, a lot more power of both accurately finding credit risk and understanding who's risky and who's not, and the ability to say no to people who aren't going to perform with credit access. And that's an important point from a stability and safety and soundness, as well as good for the consumer because they're not going to get something that they can't fulfill. But we got to get, regulators, and we'll talk about this in a minute, but also the financial services sector, including all the many vendors in the world who are selling products into banks and others, up to speed and bring the regulators along with us. And I would say even getting sufficient comfort with techniques for trustworthiness and explainability, even in something like a supervised machine learning model.
Yeah, I mean, that's a great point. I think that both of you made, which is, the regulators need to absorb, the creators need to take those steps to get in to show the regulators this is what we're doing, right? And
they need the space and the willingness for the regulators to be open and listen. And
that's right.
Frankly, I think especially with the Trump administration regulatory community, there is, apparently Travis said this yesterday, right? Like, we know that we can get better juice from the squeeze with more complex models. So there is the space for that kind of dialogue, but we should be using it, especially now.
Yeah, and I mean that tension between innovation and oversight, I know it's something that firms feel every day, especially those building with AI and the real world systems. Vaik, at Dynamo.ai, you're building with AI every day. What are the hardest governance challenges that you face in practice?
Yeah, I mean,
Might be a loaded question, but
I mean, we work with a lot of large financial institutions and governments, right? So the number one thing we see is everyone has kind of the risks identified, but how do you put together the right operating model, right? Because you're interacting with different players within every organization, right? There's legal, risk, compliance, who are the non-technical stakeholders who want to prioritize, where can my AI systems go wrong? Whereas you have your ML and product guys who focus on how do I get the best performance out of this? So I think one thing which we are observing is once you have clearly defined the risks of what your applications could potentially are they going to be leaking sensitive data, right? Or with AI agents, we are clearly seeing them deleting production databases, unauthorized access. Jailbreaking is one of the most prominent attacks, which pretty much anyone can now do, right? It's becoming very easy to break into these systems. So making sure, as Mike said, that we have the right guardrails, right, that are aligned to your organization's policies and definitions is very important, right? Because the way one enterprise might be viewing what fair is probably different from the way another organization is going to be defining what fairness is. So I think regulatory level and organizational level, some sort of clear definitions of these policies and workflows would be best.
And on the other side of the equation, compliance teams are under pressure to make sure AI strengthens and not complicates their controls. So K2 Integrity focuses on compliance. How can AI itself help to strengthen compliance rather than undermine it?
Yeah, absolutely. The job that I had previous to being at K2 Integrity was as director of the Financial Crimes Enforcement Network, where I dropped things regularly and added entertainment to the people that I worked with. We heard regularly from financial institutions about the costs of AML CFT compliance on a regular basis. We heard from financial institutions that express concerns about regulatory requirements on the one hand, but also concerns about how their transaction monitoring systems and the rules-based approach that transaction monitoring systems had resulted in numerous false positives at about a 95% rate. And that's a significant amount of alerts that financial institutions had to dedicate significant compliance resources towards to be able to resolve all of those alerts and then consider whether or not they were filing suspicious activity reports. I think for us, from a FinCEN perspective, it was a challenge as well because we just simply got more suspicious activity reports than was likely useful for law enforcement as well. And so the issue of AI adoption is one that has been playing out for a longer timeline for financial institutions around AML-CFT compliance. And I think that there is a couple of considerations that we're hearing with the regulators in the current administration, which is around AML-CFT effectiveness. How do you make AML-CFT compliance programs more effective and reduce costs for financial institutions in terms of the implementation? How and what is the role that innovative technologies can play in terms of enhancing that effectiveness? And part of it is just figuring out how to move resources to higher risk activities away from lower risk activities as well. And then, its part is, what does the regulatory framework look like with respect to AML-CFT compliance? And I think that there's been a long conversation and long consideration around the value of artificial intelligence algorithms in terms of identifying typologies and identifying financial crimes risk in a much more efficient and effective way than the traditional rules-based system. And I think that there are a couple of tensions inherent in the progress that's being made with respect to the adoption of AI tools. It's clear from our experience at K2 Integrity, and we work with a firm called Consilient that does an approach towards applying AI algorithms on a federated analytics basis. But our experience is it does reduce false positives. And the question then becomes, how do you engage with regulators effectively with respect to the adoption of artificial intelligence? How do you explain how it works and whether or not it's catching the right set of criminals? I think there's also an issue about, is it as effective? Is it more effective, less effective than existing rules-based system? And what are the appropriate metrics to be able to measure that? And so there are a number of considerations in terms of how AI can be used. From my perspective, Mike and Melissa have it right in saying that regulators have to do more to engage with not only financial institutions, but vendors as well, because I think they both play a key part of the puzzle to sort through some of the governance issues, but also to sort through some of the value issues as well.
Yeah, I think Himbit brings up a great point because there's factors around model accountability, right? A lot of these financial institutions are leveraging multiple integrated partners. They're working with other fintech solutions, and that seems to be an underlying issue as well. And so having the right framework around this will definitely, be a possible solution around that.
Yeah,
Can I add on to that too? There was also something, Him, that you sort of alluded to, and I've begun to hear this, especially from regulated financial institutions. Yes, back office, we can get some efficiencies, but I do think there is a growing level of recognition, especially among banks, of how much juice is worth the squeeze. Like, how expensive is the squeeze? And then what's on the other side of it, right? Like, even internal chatbots. Does an employee really, with confidence, want to just rely on agents and machines helping them understand what they're doing? And and I think this is a healthy period to go through, right? Enormous enthusiasm, trial and error, especially around existing norms and rules-based systems. And then we're going to see more breakthrough on what are the outside-the-box possibilities that especially AI, Gen AI language models might present to the financial sector. But I'm just starting to hear a little this is a lot of time, effort, and money and retraining of employees. And is it really getting us more than our existing processes and systems?
Yeah, and I think when you think about it from the lens of, maybe a regulator, there's all this innovation happening now. I mean, just at lightning speed, right? How do you sequence that too when you bring it to a regulator, right? Coming at them with everything all at once and saying, we got all these thousands of things, it's going to make it difficult to implement and get things moving. And it's just something that I think folks need to consider as they're sort of working through this. But we've looked at kind of what's hard today. Let's look ahead now, how these governance challenges evolve as AI becomes more deeply embedded in payments, identity, and financial infrastructure. And Amanda, given your experience in payments modernization and digital identity, where do you see the biggest gaps in current governance frameworks when it comes to AI, LLMs being deployed in payments and identity systems? So, for example, how well do current explainability standards or risk controls map to payment fraud or to consumer trust and identity decisions?
Ooh, that's a loaded question.
It's a loaded question. I come fully loaded.
You come fully loaded. No, I think one of the panelists mentioned explainability, and that's a huge, issue, especially around verification of identity. And we all know that we're moving money much faster, and the requirements around authenticating the user is necessary. But the problem is a lot of our regulatory framework is missing quite a few information around traceability in terms of decisioning. So either to approve or to block a user. And that is kind of where the gap is. It's just being able to explain where the decisions behind the reasoning, and that's what we're finding in terms of verification and identity.
Yeah, we heard on earlier panel, know your agent, which I think is something that folks that's going to be a thing.
Be a big thing, yeah.
Yeah. And Mike, I mean, you've seen firsthand how banks adopt new technologies. What worries you most about AI adoption in finance?
So it's not going to surprise folks. I worry about everything. It's just, but I'm going to focus on something that's maybe a little bit counterintuitive. To me, everything comes back to trust. Does the thing that's being deployed, does it help build trust or does it erode trust? And here we're in a phase now where we're going to get a little bit of both. And I think it's, naturally I would focus on things that are going to erode trust, but counterintuitively, there's the risk of over-promising and under-delivering. So that's something we have to think about with AI, particularly given the hype. But then on the other side, there is a risk with being too cautious. And there's a risk with really of conflating caution with not wanting to change. So I see this within myself. Sometimes I just don't want to do something, right? And because I don't want to change, I'll say, I'm being prudent. And as a safety and soundness supervisor, that is the path of least resistance. Because traditionally, not changing something is the safe thing to do. Today with AI, I don't think this is the case. And this is going to be really hard because there's a case where when cloud adoption was really ramping up, again, a lot of the standard supervisory tack was, we don't know what the cloud is, it's risky, you don't own it, slow down. And there was a period of time where that was actually the right advice. But then it switched. And it switched because now if you have an old antiquated system that's running on COBOL that's past end of life, that is risky. That is riskier than running off of something that's cloud-based. And so these things really do hit an inflection point. And my fears with AI is that inflection point is now. Because these things usually play out over a longer period of time. And this is happening so fast. And to your point about how did the regulators get involved? So back when I was acting comptroller, sandbox was a 4-letter word. It's you couldn't bring that up because here in the States, it's had a bit of a checkered history in terms of how it got played out. Whereas in other jurisdictions, that was the mechanism, right? There was a mechanism to say, we're going to create a safe space where industry will come in, regulators will be there, we're going to kind of work on it together. But I understood the criticism. The criticism was that in a sandbox, if you just kind of let anybody do anything, that Venn diagram might not overlap. And I think maybe a better analogy would be a gym. Because I've heard about this with AI agent development. Some of the large institutions, they're developing these gyms. And the point with a gym is that you're training the agent to do the thing you want it to do better. And I think if regulators had that mindset, it's you're coming in, you want to do dispositioning of an AML investigation, and we're going to do it faster, better, cheaper, let's show you. I think regulators would be quite open to that. Because that's very directed, and that's something that you can do in a safe environment. And I think that there'd be a lot of mutual benefit to approaching it that way. The key is, I think you're absolutely right, you can't fire hose that and say, we want to do these 50 things. There is going to have to be an order of priority. And I think that that's something that's going to have to be both a bilateral discussion and kind of a group discussion.
Yeah, and whether we call it a gym or a sandbox, you know, the regulators are going to have to either play in the sandbox with the folks in the sandbox or spot the people in the gym, right? I think that's right. They're part of it, and really great point.
Yeah, like one thing I want to add there is like that is why we are going towards the world of like small language models now and more like task-specific models, right? Because with a large model, it's not only like it's like more expensive, but also it's like there's like a larger like latency, right? And it's like slower. So how do we like make sure that we get like specific tasks done in the most like cost-efficient and like time-efficient manner? Is where the industry is heading.
And if I could just build off of Vake's point,
Yeah, of course.
like, this changes so fast. You know, if we calibrated to 3 months ago, we wouldn't be having that conversation. There'd be a whole army of people, you know, marching in a particular direction, and they say, "Wait a second, now we're going to pivot." So I think it does like we are just going to be way more agile than we have been in the past in terms of how we deal with these things.
Yeah, the speed is staggering, and you know, I think that almost brings us to a bigger question, touching on Melissa what you were talking about before. Around collective responsibility, how we define what responsible AI actually means, and on what you mentioned before, you know, can we build it is a different question than should we deploy it. What role do you see for collaboration among regulators, researchers, and firms in defining what responsible AI is?
Yeah, I promise I will get to that, but I'm going to go back to Mike, and I'll do it efficiently. My comment about sort of hearing hems and haws from the financial sector, like, you know, we're trying it out and it's costly, et cetera, and Mike's point about things running fast and not doing it because it's outside your norm, those are all important points. I think another component of this is to also realize, like, we might need to start, and this gets to your question, we might need to start thinking collectively together in different ways about what the possibilities of AI, what solutions, what new iPhone capabilities really AI offers in the financial services context. And so lots of institutions aren't necessarily thinking about, well, could we use it and use it as an interface with our customers, and really think about, and I'm looking at you, May, in the audience, think about how the fact that we're sitting on tremendous personal data, financial data of our customers, and could we be bringing this language technology capability and actually helping our customers as they're trying to navigate their near-term financial questions and their longer-term financial lives. Now, a bank may be like, well, I'm not an asset manager and this isn't the place and space for me, but the possibilities of the technology and what it may offer in terms of really benefiting your end consumer, small business customer, whoever it is, high wealth, you know, mid-market, this is time for like creative thinking. To your question about like where's the need for collaboration, without question, and I think the Jungle Gym, you didn't say this last year at the AI Symposium, Mike, but I think you're onto something there. But in the context even of identity and this need to know and to trace, is the person who they say they are, is the business, is the agentic AI, that is all about, do we have sufficient data for understanding, is that person or is that agent activity really genuinely the agent activity? That probably would benefit all of us if we were thinking more holistically about shared data intelligence and insights. And we all know that we've got an enormous conundrum around 1033 and what's going to happen with it. But that is the gateway in my mind to the real possibilities of leveraging AI, whether it's for personal financial advice and activity, and let alone agentic AI and commerce questions, or just making sure that we're not letting bad actors into the system in the first place, right? Like, so there is the need for collective effort around that kind of data consortiums, so that individual firms can leverage their particular niche and expertise and deliver products and differentiate, but we're solving some of these issues that are just, I mean, fraud, scams, bad actors. So there's the need collective there.
I mean, it sounds like governance only works if the incentives really align. And Him, turning to you, considering risk-based oversight, what incentives, both positive or punitive, do you see as effective for ensuring that companies developing and deploying AI systems behave responsibly?
I think the first point I have to that is that responsible AI, just like responsible AML CFT compliance programs, shouldn't just be about avoiding penalties. I think that that is the core, that is a key message over and over again with financial institutions, crypto exchanges, AI vendors, and the like. It really should be, it's totally missing the point. If it's about penalties, it should be about building trust, as Mike said, building integrity, because that's what's critical to adoption of AI. I think I have a lot of observations based on what everybody said so far. First of all, my preferred analogy is a rugby scrum is maybe a little bit better than a gym in terms of how the regulatory engagement looks like and probably should look like. Second of all, I think that building off of Melissa's point, regulators are often in a reactive posture vis-a-vis financial institutions with respect to AI. I think in the AML space, there's actually a opportunity for regulators, and particularly financial intelligence units, FinCEN, and law enforcement to work together to be proactive about how they use AI, but also how they promote the use of AI by financial institutions. FinCEN regularly publishes advisories and alerts to financial institutions about various typologies and issues. They recently published one on Chinese money laundering organizations and how they are facilitating cartel activity and fentanyl precursor exports illegally into the United States. I think it would be really interesting, and most of those alerts and advisories have a list of red flags. And they say, you know what, there's X, Y, and Z behavior. I've sat down with financial institutions, and we've had these conversations. I've asked, how do you incorporate these typologies into your AI models, your transaction monitoring systems? And a lot of them just scratch their heads. They say, we spend a lot of time sitting around a table trying to figure this out. I think that like FinCEN and the regulators have an opportunity to sit down with law enforcement and sort through, well, if you have a particular set of typologies that are relevant, you're sitting on a mountain of data that actually has true positives with respect to a particular typology. Why can't regulators come up with algorithms that, instead of just a list of red flags and typologies, come up with algorithms and disseminate those to financial institutions based on a trained data set of true positives? I think that would be an incredibly valuable thing. But to get to that point, I think it comes back to Mike's point, which is that regulators and law enforcement, financial institutions, and vendors all have to sit at the same table to figure out how all of this works. My second point is that, at K2 Integrity, we work with a number of small and mid-sized financial institutions doing model validation with respect to the AI tools provided by vendors. And, one of the challenges is that vendors often have proprietary algorithms, and it's difficult to get a degree of transparency with respect to those algorithms and what their alerting models are. And so I think one of the issues, again, coming back to vendor management, is what is the relationship between vendor management and the financial institutions? Where do the responsibilities lie? Because, of course, financial institutions, in terms of using AI models, will feel constrained if they're facing significant penalties coming from regulators if they don't do appropriate model management, and there are risks that flow from the integration of AI tools. And so I think that part of the conversation is not only around governance with respect to the AI algorithm, but a little bit of a conversation around the governance about the overall ecosystem in terms of vendors, financial institutions, and what the shared responsibility is as well.
Thanks. Vaik, you're already operationalizing some of these governance principles in live products. Dynamo.ai's tools include things like Dynamo Eval, Enhance, and Guard, which aim to assess, remediate, and guard in production. In your view, what governance approaches, whether they're technical, policy, or legal, can best enforce ongoing compliance, not just pre-deployment review?
Yeah, I think like the first thing which we should do is like do that like thorough analysis or like AI risk assessment of like potential like data leakages or security compliance problems. So that's pre-deployment, right? But the most important thing here is like active monitoring and observability of like what actually your customers are like using when they're like using your product, right? You need to know what are like the different kinds of actions they're taking, or like what are the questions like responses which when they're like interacting with the system. So I think that active monitoring and observability piece would guide you to take the next set of decisions, right? Because there are like new attacks, there are new like random like threats that emerge every day. So it's not like, oh, once we do this, then we are like good to go, right? It's more of like a constant updates that needs to happen. But the most important thing is there needs to be a human in the loop, right? Because I think it just cannot be fully automated at this point. We are not there yet. So a human in the loop. So we should be thinking it as like, okay, how do we have these guardrails or protections, and how do we take these decisions faster, but not like fully automated? So that's what I would recommend to all our customers. And
Yeah, the we're not there yet. One of the takeaways that I've had from today, right? Like we look at no. I think it's a good point that I've heard come up throughout the day, which is, the last panel talking about AI and stable coins. They said, where are we with fully automated, the movement of money and all, and they were like, maybe the top of the second inning, right? And I thought that was telling, and then having humans in the loop, and that's not to say we won't get there, but today there's still some work to be done. So with that, maybe I'll just go down the line here. You got about 2 minutes each. What does audit-ready AI actually look like in financial services? So that's the question, and then you can go from there.
Well, the answer to that is actually pretty easy. It's just you have to be able to trace everything. Right? And that's easy to say, hard to do.
Yep.
Yeah.
But I do want to go back to your second inning analogy. The benefit of being early is that you can craft the thing. So I want to go back to Him's point about responsible AI. Usually folks wait for like, what are the rules? What time do I have to brush my teeth? What time do I have to do this? Habits, norms, culture, they drive way more of the outcomes than anything that a regulator can promulgate. And I think this is a really important point right now. Everybody who's doing AI has a role to play in setting the norm. You can say, I think this is okay to do. I don't think this is okay to do, because it's all in flux. And I think people don't maybe assign enough power to themselves, whether you're in an organization or in a conference or a group. I remember there's that book, Freakonomics, where Levitt talks about, there was like a pickup time for kids at some daycare, and there was just a norm that you picked up your kid on time. And then they instituted a $5 penalty if you were late. And guess what? Everyone was late because they were willing to pay $5, right? So it's like the cultural norm is strong, and I think that's something to focus on. Like, what is in bounds? What is out of bounds? And we have to talk about it. You can't just hope someone talks about it. You have to talk about it. I have to talk about it. I think it's something we can all engage on, because that will shape the responsibility more than a bill or a reg from a regulator.
Mike, you want to?
Yeah, in my opinion, I think it's about doing that correct AI risk assessment and then making sure you have the right set of like demand controls, right? Because it's not only about like identifying the problems or like getting to know where it's going wrong, but you also have like the potential like remedies to make sure you could actually like solve it so that you can take AI to like production faster.
Yeah, I love the thought process that it is a collective effort. I think that is super important. And the aspect of human intervention, right? AI is a tool, is a productivity tool, but we still need to have oversight in some of the data that's being collected and reviewing all the models that are put together. But I think essentially if we continue that collective effort mindset, that will help solve a few of these solutions.
I'm going to cop out here. I don't have an answer for it. I will say at FinRegLab, as a research org, we want to go study that and come back next year with some thoughts.
Great. I feel like I should just mic drop. I think from my perspective, it's a collaborative exercise between regulators and financial institutions and vendors and AI developers in terms of trying to figure out what audit-ready means in a particular context, because I don't think it's uniform in every context. And that's the key point, is that we have to be flexible in terms of the circumstance, and then we have to test it out from a regulatory perspective. Again, I would second Mike's point in terms of the issue of just governance and putting a primary focus on governance, because ultimately the reliability of the overall framework and system depends on individual vendors, individual financial institutions, in terms of them doing the right thing and communicating to financial institutions and regulators what the right thing is, and then you'll see positive development on that front.
Yep. Anyone, anything else? No?
What's your thought? What's your thought?
Well, that's a great question. I didn't know. I little reversal. Look, I mean, I always think that you have to assess the regulatory environment, and in this regulatory environment, there's an openness to talk that maybe there wasn't before. Whether it's AI, whether it's crypto, whether it's blockchain. The last time you could go in and talk, but you might get a subpoena. I think it's a little different now, maybe the other end of the extreme, but there's so much innovation happening, and I think, Mike, to your very first point about, regulators need to absorb and take it in, but that's incumbent on the market and those creating it to feed that correct information into the regulators, because they don't know what they don't know, and I think there is a willingness to learn and understand. So I don't know if I answered your question, but I said some stuff, and all right, we have time for one question. Chuck.
But not Chuck.
Liability.
So the question is, if you want to have incentives, you have to have meaningful and swift accountability, so that if I'm harmed by your work, I get a whole instantly. Now, Gibson Dunn, I'm Gibson Dunn, so you'll call Gibson Dunn to defend it. What about liability?
Yeah, the question is, what about liability?
So I think a good model to start from is for cloud. So back when I was acting comptroller, there was a task force on cloud, to saying, what is the liability model for cloud providers to banks? Recognizing that banks can't do the cloud provision themselves. They have to rely on the cloud providers. So there was a shared liability model between the cloud providers and the banks, saying, depending on the model of approach, whether it's infrastructure as a service, SaaS, whatever, that different parts of the stack will be owned by different parties. And that was relatively simple, because it's just the cloud provider and the financial. I think the point that Melissa made is, this is now going to be a very fragmented world. It's not a two-party system. This is a multi-party system. But we are going to need some shared responsibility model that is like that apportions it, that puts it into terms that we can all agree on, to say, okay, you're responsible for this, you're responsible for that. Otherwise, it's going to be a lot of finger pointing when things go wrong, and that's not going to work long term.
I also want to add on and maybe come back to the question. What was the train of thought? And it's gone. It'll come back to me.
I can step in here on just from a FinCEN perspective. I think that enforcement around it's actually, I would view it in the opposite, is that currently in the rules-based system, you're missing a lot. And so there's a under-enforcement with respect to financial crime because it's incredibly costly, and you're not detecting as many true positives as you should be doing. And in this case, you're ending up in a different sort of incentive regime where the increased deployment of AI will result in increased investigations, increase prosecutions, and I think that's an overall positive. So there's sort of a balance here in terms of thinking about enforcement with respect to, or supervisory enforcement with respect to governance issues and how it's implemented. But the flip side is that there are strong positives with respect to the broader law enforcement regime as well.
Okay, it just came back to me.
Yep.
I mean, we are saying like get in, talk to the regulators, and that's important, but settling these questions, you know, liability, multi-parties, bilaterals, it's going to take work among industry stakeholders. And yes, engage the regulators when you can, but getting more clarity around that in anticipation of future regulators who are going to have a different point of view will be really important. And so we are, you know, we're making the case like get in there and talk to the regulators, but I think there is actual real work to do because there's a lot of anxiety that I go talk to them now and I'm going to be bit, you know,
Yep.
4 years from now.
Yep.
Some collaborative work among those different industry stakeholders outside of the regulatory sphere would be really valuable too. And that means bringing in places where the data sit. If you're talking about data and fraud, this means the, you know, big tech companies. But there's a lot of work to do in that way, I would say.
Yeah, that's a great point. A lot of times we see the biggest challenges are folks will go in too early and they're not ready to go in. So that's a great point. And with that, we are at time. I want to thank my panelists, Mike, Vike, Amanda, Melissa, Him. Thank you so much. We now have a 35-minute break. We'll begin our next session on engineering the future of scalable entrepreneurship at 3:30. Thanks.